Al Capone wasn't just a gangster. He was a businessman operating in one of the most profitable industries in American history, an industry created not by free market competition, but by government policy. Prohibition didn't simply outlaw alcohol, it manufactured a market, removed legal competition, and handed control to whoever was bold enough to take it. This market turned ordinary criminals into millionaires, corrupted entire cities, and proved a timeless rule of economics. When lawmakers ignore demand, someone else will supply it. The 18th Amendment, passed in 1920, was sold as a moral crusade. Alcohol caused crime, poverty, and domestic abuse. Remove it, and society would fix itself. But politics cannot stop economics. Demand for alcohol didn't vanish. In fact, it grew. And when demand exists without legal supply, prices rise. That gap between law and reality is exactly where Capone built his empire. Born in Brooklyn in 1919 to poor Italian immigrants, he was embedded in organized crime by his early 20s. Chicago during Prohibition wasn't just a city of opportunity, it was the epicenter of an underground economic revolution. Liquor became the new oil, and Capone, with his organizational talent, connections, and ruthlessness, was perfectly positioned to dominate it. This wasn't a gang selling bottles in alleys, it was a vertically integrated operation. Capone controlled breweries, distilleries, import routes, and distribution networks. His product flowed into hundreds of speakeasies, underground bars disguised as soda shops or nightclubs. The organization earned around $100 million a year in 1920s dollars, roughly $1.5 billion today. But he wasn't just making money, he was laundering it. By investing in restaurants, nightclubs, and cash-heavy businesses, Capone masked his income while giving his empire a public face. Bribes ensured protection. Politicians looked the other way. In this city where half the economy had gone underground, Capone was not just an outlaw, he was an employer, a patron, even a local hero to some. The key to his success wasn't violence, though he used it, but risk management. He understood that prohibition was both his opportunity and his vulnerability. His profits existed because the product was illegal. The day alcohol became legal again, his margins would vanish. So he diversified. Gambling, prostitution, and other rackets became part of the portfolio. Alcohol remained the cornerstone. Before Prohibition, beer, wine, and whiskey were low-margin commodities. Once outlawed, every step in the supply chain added markup. Bribes for police, payments to drivers, fees to middlemen. Prices skyrocketed, yet demand remained elastic. Alcohol was woven into culture and tradition. Capone saw what lawmakers didn't. Prohibition didn't stop crime, it industrialized it. His empire operated like a corporation without legal limits. Vertical integration, market control, supply security, brand reputation, and unbeatable distribution, all the elements of modern enterprise only powered by an illegal market. The economics were extraordinary because the market was artificially constrained. Each barrel, each bottle was a premium product, not for quality, but because of risk. And Prohibition created another system, a financial ecosystem of corruption. Money flowed to police, judges, city officials, and even federal agents. Corruption became the operating system. By the late 1920s, Capone's reach was so extensive that Chicago politics and organized crime were two sides of the same coin. Businesses thrived or failed depending on their connections to the outfit. Rival gangs tried to muscle in, leading to turf wars like the St. Valentine's Day Massacre in 1929. Violence was visible, but finance was the foundation. Policy-built power is always vulnerable to change. By the early 1930s, public opinion shifted. The Great Depression changed the political calculus. Tax revenues from legal alcohol became more appealing than moral arguments. And Capone, now a symbol of lawlessness, became a prime target. The government couldn't convict him for bootlegging. His empire was too well protected. But they could go after taxes. In 1931, Capone was convicted of income tax evasion and sentenced to 11 years in federal prison. His downfall wasn't a shootout, it was paperwork. By 1933, prohibition was repealed. The black market monopoly evaporated overnight. Legal breweries and distilleries returned. Prices normalized. The liquor trade went from an illegal monopoly to a regulated industry. One of the largest criminal economies in American history became taxable revenue. The lesson? Economics are more powerful than moral law. Demand persists, supply adapts, and profits are enormous. Fast forward to today, and the mechanics are unchanged. Take cannabis legalization. For decades, marijuana was a multi-billion-dollar underground market. Enforcement didn't eliminate it, it funneled profits to those willing to take the risk. Now, legalization shifts profits to corporations, governments collect taxes, and markets consolidate. Or consider cryptocurrency. For years, it existed in a regulatory gray zone, attracting early adopters and opportunists. Enforcement lagged, and profits were massive. As regulation strengthens, institutions enter, and early margins shrink. The pattern is the same. Scarcity and legal gaps create opportunity. The same principle applies to industries influenced by sanctions, energy policies, or environmental regulation. When governments restrict supply, they don't erase markets, they redirect them. Oil under sanctions, rare earth metals under export controls, carbon credits under regulation. Profits go to those who understand the gap between law and demand. Capone's story shows that success is about spotting structural inefficiencies, markets artificially constrained by policy, and exploiting them. You don't need to run a criminal empire to see them. They exist everywhere. Those who identify them early, legally or otherwise, are the ones who profit. Modern financial lessons. First, markets are never purely free. Policy, regulation, and enforcement shape them. Money moves when these shift, and understanding that is a form of financial education. Second, scarcity creates opportunity. Recognizing artificial scarcity positions you ahead of the curve. Third, policy-driven markets are volatile. Just as prohibition ended overnight, today's profitable restrictions can disappear. Wealth depending entirely on a legal gap is temporary. Diversification is essential for survival. Capone succeeded by understanding his environment and failed when it changed faster than he could adapt. The cycle of policy, scarcity, and profit never stops. It continues in cannabis, crypto, commodities, and every sector where demand exceeds legal supply. History doesn't repeat, but failing to understand it can destroy you. The opportunity is always at the intersection of law, money, and timing. Capone exploited structural inefficiencies. Today, the lesson is the same. Identify gaps created by policy, recognize artificial scarcity, diversify, and act strategically. Success comes to those who read the system better than everyone else, not just to those willing to break the law. Markets are shaped by rules and enforcement, not morality alone. Scarcity and demand define profit, and structural inefficiencies exist everywhere. Recognize them early, and you gain an edge. Capone's empire ended, but the cycle continues. Legalization, regulation, and policy shifts create predictable gaps. Entrepreneurs and investors who understand this cycle will find opportunity where others see only restriction.
The story of Al Capone teaches timeless principles. Spot inefficiencies, anticipate change, manage risk, and diversify. Profit follows understanding, not just force. Economics, not bullets, shaped his legacy. If this story gave you new perspective, subscribe and study the lessons of history. Markets, policy, and opportunity intersect every day, and those who pay attention will always find a way to profit. From bootlegging to cannabis, from early cryptocurrency to sanctioned commodities, the mechanics remain identical. Opportunity exists where law and demand diverge. Understanding these patterns, economically, legally, and strategically, is the true path to wealth and influence. Capone's rise and fall was not about morality or about